Thank you for checking out our channel. Just so you know, if you are looking for affordable and quality housing, you can always check out our website www.az-housing.com. It will be in description. When is employee housing taxable to the employee? Some businesses pay housing expenses. The IRS calls them lodging expenses for employees. Depending on the circumstances, certain housing and living benefits can be taxable to the employee, and sometimes these benefits can be a deductible business expense for your company. Several kinds of housing arrangements for employees include employer paying for the housing of employee's choice, often using a housing allowance. Employer-provided housing for employees at a specific location. Temporary lodging for employees while they travel on company business. Lodging expenses and taxes. Tax deductible for the employer. If you pay for lodging for employees under any of the arrangements above, this expense is considered to be deductible as a business expense. That is, you can include these costs on your business tax return if you can show they are ordinary and necessary business expenses. Taxable to the employee. Employee housing benefits can be non-taxable to employees if all three of these conditions are met. The housing is provided on the property owned by the business or employer. The housing is provided for the convenience of the employer. The employer must have a substantial business reason for this, such as a remote work location. The employee must accept housing as a condition of employment. A condition of employment is an agreement at the beginning of employment by both employer and employee. Some examples of housing that meets the criteria and are not taxable to the employee include fishing employees who live on a boat provided by the company, a construction employee who works at a remote location that has no other housing available, a live-in nanny who must care for children at all hours, giving an employee a place to stay or offering a housing allowance because they have a long commute does not meet the definition of a condition of employment. The condition of employment requirement means the employee can't perform the job without staying on your property. Meals for employees that are provided on your business property for the convenience of employment are excluded from employee taxes. Restrictions on housing benefits. In addition to the three criteria above, there are other reasons your payments for employee housing might be taxable to employees. Employee housing can't be included in a cafeteria benefits plan. These are separate benefits and they must be taxed separately. If you pay employees a housing allowance or allow the employee to take extra pay instead of providing them housing, it's taxable to the employee, even if on-premises housing is one of the options. Housing as part of an education benefit is considered taxable to the employee. Employee housing overseas. The value of lodging for overseas employees isn't taxable for the employee if it meets all three of these requirements. Housing must be at your business location. Housing must be for the convenience of your company. The employee must accept the housing as a condition of employment. Reporting when housing is taxable. If the employee's housing benefit is taxable, it must be included in the employee's income for tax reporting. You will need to include this value on the employee's annual W-2 form in Box 1, along with other fringe benefits. Use the fair market value of the cost to determine the amount. If you don't include an amount for this benefit on the employee's paycheck, ensure the employee knows, so they can plan for this additional tax at tax time. Employer-provided housing for employees. Get an agreement. If you provide housing for employees, on your property or somewhere else, you are in effect creating a landlord-tenant relationship, and you should have a signed agreement with each employee. Landlord-tenant law is regulated by states. An attorney should help you work out the details so that you comply with your state's laws. Your employer may occasionally require you to work at a different location temporarily but longer than the amount of time usually associated with a business trip. For example, you may be working on a project or assisting in opening a new location. These temporary assignments typically require you to stay in temporary housing. Reimbursements you receive for temporary housing while on temporary assignment are not taxable, but those received for permanent assignments are. Definition of temporary housing. According to the Internal Revenue Service, Temporary housing is housing that you live in when working on a temporary assignment for your employer that takes you outside of an acceptable commuting distance from your home. The IRS further defines temporary as 1 year or less. Temporary housing may include a hotel or motel, an apartment or a rented house. Non-taxable. Temporary move. Any reimbursements that you receive from your employer for travel and living expenses you incur while on a temporary assignment are not taxable. Your employer will not include these reimbursements in your gross income on your W-2, nor should you include this income on your tax return. If you incur all or a portion of these expenses without reimbursement from your employer, you may deduct these expenses from your taxable income as unreimbursed business expenses. Taxable. Permanent move. The IRS does consider any reimbursements for temporary housing associated with a permanent move taxable. For example, if your employer transfers you to a new office and pays for your relocation, the IRS treats those expenses as non-taxable moving expenses. However, if your employer also pays for you to stay in temporary housing while you finalize the move out of your former home, then 100% of those payments are fully taxable. Caution. If, for example, you live in temporary housing while on an 8-month assignment, the reimbursement for that housing remains fully deductible for the duration of your stay. However, if your employer and you subsequently decide that you will stay in your temporary location for another 6 months, bringing your total stint to well over a year, the IRS then considers your temporary assignment to be permanent. The date the decision was made to keep you there for longer than a year is the date that your temporary housing reimbursement becomes taxable. This applies whether your employer physically reimbursed you or paid for the housing directly. W-2. For a permanent move, typically your employer will include all your moving expenses, both taxable and non-taxable, on your W-2, with the appropriate codes to clearly identify what is included in or excluded from your taxable income. Your employer will include the non-allowable expense, the taxable income from your temporary housing, in Box 1 of Form W-2 with your other wages. The non-taxable portion of your moving expenses will appear in Box 12. As a general guideline, the IRS requires you to report as taxable income any money you receive to obtain temporary housing or the rental value of housing someone provides you. However, there are exceptions to this rule, such as when your move is a requirement of your job and your employer pays for your temporary housing. On-site temporary housing. When your employer requires you to live in housing on its premises, even if it's only temporary, the IRS allows you to exclude the value of this housing from your taxable income if certain conditions are met. In addition to the location of the housing being on the employer's property, the employer must have a business purpose for requiring you to live there. It's not acceptable if it's merely for your own convenience. Rather, your employer must require it as a condition of your employment. You should be aware that if you accept a cash payment for a housing allowance instead of living on-site, the income tax exclusion isn't available. However, you may qualify to claim a deduction for the temporary housing expenses you incur. Deductible temporary housing. In the event your employer requires you to relocate away from your home area and it's necessary for you to obtain housing in the new area because the distance from your home is too far to commute on a daily basis, you must include any temporary housing allowance you receive in your taxable income. However, if at the outset both you and your employer don't expect the job to last for more than 1 year, you can deduct all of your temporary housing expenses on your tax return to reduce the taxable amount of your allowance. You can include the cost of your rent or hotel bill while you're away from your home, monthly utilities, telephone service and most other reasonable expenses that you incur as a result of the temporary relocation. Clergy members. A special exception to the general rule that temporary housing allowances are taxable applies to members of the clergy. If you're a clergy member, you can exclude all housing allowances the religious organization provides to you when it relates to the clergy services that you provide. This exception is applicable regardless of whether the housing is temporary or permanent. If the religious organization allows you to live in a home it owns, you can also exclude the value of the rent, as well as any housing expenses your employer directly pays for. Members of the military. As a member of the military, the federal government provides another tax-saving opportunity by allowing you to exclude from taxable income all amounts you receive for temporary housing. This includes the basic allowances for subsistence and housing and the cost of living allowances the government provides you with when your duty requires you to temporarily live abroad. Additional expenses that the exclusion covers include all reimbursements or allowances you receive from the government to cover the moving expenses you incur for a temporary assignment. Please do not forget to like this video and subscribe to our channel.